Hello, 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 hello. Let me see. Hello, hello. Test. That's excellent. Hi all and welcome to another edition of Midday Market Review, live trading, key trading levels and trading setups for popular markets. My name is Phil and I'll be your presenter today. Let me just see if we are streaming okay, and I'll wait for a couple of more minutes for people to come in and join us, and we'll do it. Excellent, excellent, excellent. Okay. If you haven't seen this before and you're looking for a community, check out TraderCast. If you're looking for the education, check out mytradingskills.com. Some of our courses are completely free, so check them out, see how we teach, and let us know if you need help with anything else. This is a little bit about me. I had the privilege of speaking in front of various different industry events over the past 10 years, and I had the privilege of teaching many people how to trade. Now, this brings me to disclaimer. Since I'll be talking about some live trades, possibly even placing a live trade during this event, this is my experience and opinion only, not the advice. What I'm basically trying to do is I'm trying to have a practical application, real-time, live practical application of what I firmly believe a novice trader should be able to do. So basically what we're teaching in the course is how to apply it in real time. That's basically what it is. And from the open positions, I currently don't have anything open. This was traded yesterday, for those of you who watched yesterday's session. This was a little scalp at the end when the economic data came out just before 3 o'clock my time here. And I'm in and out of that position very quickly. So I don't have anything open. For those of you who watched the session, if I place any trades, I will be updating this and keep you posted. Okay, from the economic data point of view, we had a couple of things of interest today. We'll talk about all of that, but I think this week is a little bit funny because firstly we have a bank holiday in UK for a Jubilee, so tomorrow and Friday, UK will be on holiday. We also had Memorial Day Monday, so US markets were closed on Monday, and we have non-farm payroll on Friday. So in 3 days' time, we have US unemployment data, which will likely bring some volatility to the market as well. So a few things kind of bubbling up, and then all eyes are on next week's European Central Bank rate decision. So that's kind of the big thing. Okay, a very quick summary. At the moment we are seeing gold is pushing higher. I'm not in this trade, and I'm actually thinking maybe I've missed something with gold. Dollar yen is into resistance at 129. Cable is going sideways. Euro dollar is doing quite well, 107. Almost 30, 127.30, and then we have a attempted move higher in euro sterling because of that perceived interest rate hike by European Central Bank. Yesterday we got inflation report which showed 8.1 inflation reading, which is very high. Market was expecting 7.8, and that means that European Central Bank will likely hike rates, so therefore euro is strengthening. Crude oil currently is trading very close to 116.60. We'll talk about that. This was all triggered by EU partial ban on Russian oil imports. Now let's go and check out a few things. Top 5 things we should know before we start trading today. The big story was that Treasury Secretary Janet Yellen admitted that she was wrong when she said that inflation would not pose a continuing problem. She said, "I didn't fully understand the unanticipated and large shocks stemming from supply bottlenecks I think she was interviewed on CNN as well. And then also we had Fed Atlanta President Bostic said that his suggestion, which happened last week, that Federal Reserve should take a September pause from hiking interest rates shouldn't be constructed as a Fed put. So he was kind of clarifying his stance. So it's all linked with the US dollar moves at the moment. There is more news on Ukraine. President Joe Biden said he'll give Ukraine advanced rocket systems and other US weaponry to better hit targets in its war with Russia. What can you say about that? OPEC plus, to the many issues with Russia's invasion of Ukraine, another might be an early end to the Organization of Petroleum Exporting Countries and Allies Oil Supply Pact. The 23-nation alliance led by Saudi Arabia and Russia is due to finish restoring production halted during the pandemic by the end of September. The Wall Street Journal reported on Tuesday that OPEC is contemplating suspending Russia from coalition's quota system as sanctions prevent Moscow from increasing output, which is what we were talking about earlier on EU. The Saudis and UAE might fill the resulting supply gap, according to Wall Street Journal. And then we have manufacturing PMI, ISM manufacturing releases today, jobs, JOLTS opening, Bank of Canada interest rate decision, and that's pretty much it from the top 5 things we should know before we start trading today. Ahead of the US Open, US futures struggled for a direction according to news feeds as investors assess developments in the debate over how much central bank's monetary policy tightening is needed to fight inflation. So that's pretty much it where we are at the moment. So now let's go and check out a few markets and see what's moving, and then we can take it from there. Hi, Mr. Bars. Hi guys. Important thing to talk about today. So let's talk about Dow Jones quickly. Yesterday it was a funny day with kind of this big dip, and that dip was bought. And if you remember, I was looking at this rising trend line here to stay intact. So we had a little flush lower and then a dip, and now it's kind of doing sideways. So really very little that we can do with this at the moment, apart from identifying this as a trend line here, which could be broken. So if we see a confirmed breakout and a bullish continuation to the upside, so the next level would be on 33,660, breakout above that level targets 33,960. So that's the kind of basic premise. Alternatively, if the market's open and we see a big reversal and a dip below these current lows here, then markets could reverse and carry on falling towards these highs at 32,670. So it appears to be that market is looking for a bullish breakout higher. I don't have anything open. Quite often you could see that markets attempt to go higher ahead of the open, and then what happens is they retrace at the open itself, and then if that's bought, then the price could go higher. So something like, so this would be a breakout, retest, and a move higher. Something like that. So the key trading level around 33,050. 33,050 would be of interest. But let's see. I'm completely open to any opportunities that might come my way. I'm happy to short. I'm happy to go long. Market is looking for a direction at the moment. I don't know if you are looking at anything, guys. If you are looking at anything, let me know. The other thing that we could talk about very, very quickly is Nasdaq is also moving higher and S&P is moving higher. So all three indices are looking for a potential breakout higher. Interesting. The other thing that that's actually of interest to me is gold, and gold is currently looking quite bullish at 1846. So what can we do with gold? So the trend in gold is to the downside. Gold is clearly capped by this sequence of the previous lows and previous highs at 1860. It does need to break and create a daily close above that level. I had the 1830 level of interest, and I was looking for a pullback and then a rally from there. Short-lived pullback and a rally, and then it was rejection, and then another retest of that level at 1830. So let's see if this time level holds. This is the 4-hourly candle. I would like to see if we get something like that. So breakout, retest, and a push higher. This would also correspond to this resistance here and then this support here. So here we go. One spike, pullback, another spike, pullback. So high, lower high, lower high, low, lower low, lower low into support, and now this a bullish engulfing reversal. So it's a big reversal. I would like to see what happens when the price comes around here. When the price comes around here. So let's see if that happens. But I'll keep you updated if I decide to do anything with gold. The other thing that we can talk about very quickly is crude oil. That's quite topical for a couple of reasons. We mentioned that already. So crude oil appears to be very bullish, and it's bullish because we have the sanctions kicking in. That means less supply, demand is still high. A key trading level for crude oil is really up here at the breakout of these significant swing highs. So what can we do with crude oil at the moment? Well, this looks like a fairly steep falling wedge here, but this is the support. I can extend it, touch, another touch, another touch, another number of touches, 2 touches here. It's a decent trend line. It's a decent trend line. It is possible that we could see a breakout from here, and then maybe a little retest like that. So this swing high here, breakout, retest, and then a push higher. So let me just do that. This is the 4 hourly in oil. So crude oil appears to be bullish as long as it stays above these clusters of the lows, 11530 or thereabout. So this area here. I don't have anything open in crude oil. I am bullish crude. I think, you know, crude could carry on higher. But I have nothing open at the moment. Push, consolidation, previous resistance, breakout, retest. Tempting, but a little bit too speculative for me at the moment. A little bit too speculative at the moment. Let me see if there's anything. No, there's nothing. There's really nothing that we can do. So what we can do, we can go and check out a few currency pairs. Do you need anything covered? I'll say hi to few people who are watching. Angelo, Daniel, Danny V, Enrique, Mr. King, Jerry, K, Glenn, Mr. Power. Anybody else? A few people. Now let me just very quickly talk about few currency pairs. Look, euro sterling is moving higher. All good? Okay, thanks. I'm looking at gold at the moment. Again, from a very, very simplistic breakout point of view. This is a nice engulfing candle. Quite often you see a bit of a pause. This is a 15 minutes, so we have one,
quick heads up,
2,
10 minutes now
3,
to the bottom of the hour,
5,
when we
6,
get
we have
Canada's
6.
manufacturing PMI for May. The prior was 56.2.
Test. Okay, that's coming through. Yeah, this 1830 was a good level. I missed it. Okay. Now let's go and check out few currency pairs. Apologies. So let's talk about euro dollar. Euro dollar appears to be waiting. This looks to me like a rising wedge. From the trend point of view, this is downtrending market. So there's a selling pressure here. This type of setups, they have the tendency to break to the downside. And what I mean by that is this type of setups have the tendency to break to the downside, have a little retest, and then have another leg lower. In addition to this larger trend here, I'm also seeing this developing within the trend. So this is a clear indication of energy buildup. And this type of patterns, they also have the tendency to break to the downside. Traders who trade them, they would normally take the widest point of this consolidation and extend that to the downside, and that will bring us to cluster of these lows and 106.60, 106.50 area. In order for that to play out, we should see a rejection either up here. So for speculative traders, short around 108.40 with a tight stop 107.40, 107.50, 107.60. So about 20 points of risk for a potential flush lower. This could be triggered by the data on manufacturing, could be. The other scenario would be a dip below these lows. So sell off, sell off, sell off, loss of lows, a retest, and then another leg lower. So that's basically short below 107 with a stop at 107.20 or 30, 20 or 30 points risk for a take profit towards 106.50. So 50 points of gain for 20 or 30 points of risk. Not the most ideal risk to reward ratio, but that's what it looks like. If we see a breakout higher and a retest and a gradual push higher, then all bets are off. The price can go up to 107, 107.90, 108 very, very quickly on euro dollar. So far, anything I'm seeing at the moment is I'm seeing it as a highly, highly speculative entries. Highly, highly speculative entries. So let me see. When is this due? Manufacturing PMI. Manufacturing PMI in about 20 minutes, 21 minutes, just shortly after the US Open. And then ISM manufacturing PMI would be at 3 o'clock my time, which would be in about 36 minutes from now, which would be 10 o'clock in the morning in US. So I think these two releases could possibly trigger some market volatility, a little bit of movement. And there is also Bank of Canada interest rate statement, and that's clearly visible here with US dollar, Canadian dollar. There's a selling pressure here on US dollar. So what would I do with this? Well, not very much. We have falling resistance here. We also have this, which could be seen as a support, either here, but we need 3 touches. I'll delete some of this stuff. So bulls are looking for a breakout into resistance. Bears are looking for a sell-off. For a potential bounce here. that's where we are with the dollar CAD. If I do anything with dollar CAD at the moment, I will be front running the news. Not the best strategy at the moment, but we are approaching some decent levels here, because look, we have the cluster of these. So there's a low, 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 high, a number of highs. Close to 126, 126.20, 126.30. The price should really do something from here fairly quickly. Otherwise, it'll go to the next level of support, which is down here. So I don't have anything in dollar CAD at the moment, but just looking ahead of the interest rate decision. So let me just see. Very good afternoon, Raj. How are you, Mr. Naganga? Can we cover Canadian dollar, Japanese yen? Canadian dollar, Japanese yen. So let's do that. I don't think I've seen that chart recently. I'm not much of the CAD Japanese yen trader, but I'll put a very basic template, price no grid. So there's absolutely nothing on this chart apart from the price.
1 minute now until the bottom of the hour, when we get the Canadian manufacturing PMI for May. Prior was 56.2.
It's very, very little. According to breaking news, Kremlin, EU sanctions on Russian oil will affect not only Europe, but the entire global energy market. I'm talking about oil because obviously there's a correlation between Canadian dollar and oil as well. Not Russian oil per se, but crude oil from North America, in Canada in particular.
56.8 for the Canadian manufacturing PMI for May. That's 56.8 from a prior 56.2.
It's very little movement. This is Dow. This is Nasdaq. Gold.
In the report for the Canadian PMI, it mentions that buying activity expands at a record rate, and the rates of input costs and output price inflation ease to 3-month lows.
Okay. Okay, let's go and check out CAD Japanese yen. Oops, sorry, didn't mean to do that. CAD Japanese yen. So US markets are open at the moment. Let's check that out. CAD Japanese yen appears to be breaking out higher. This looks like a nice uptrending market.
OPEC sources here that the OPEC plus JTC meeting did not discuss exempting Russia from oil supply deal. It's following on from that Wall Street Journal piece yesterday. Two sources reporting from Reuters the OPEC plus JTC meeting did not discuss exempting Russia from its oil supply deal.
Okay, this is the monthly chart because there's really very little that we can check out here. So this is the previous monthly low. This is the swing high. So that's our resistance. And then we also have another resistance up here. So 104.56, 106.30, and then we have the previous monthly full candle closing there as well. So that's where we are. From the weekly, this looks like a corrective pullback and a rally in overall uptrending market. So low, higher low, higher low, higher low. Daily, higher lows, decent consolidation here, and this looks like a breakout. So therefore Canadian dollar strength, Japanese yen weakness. We have a cluster of these highs. So that's obviously something to pay attention. But this looks bullish. This looks bullish. So either a pullback to 101.90 for a rally higher, or a continuous breakout above these current levels could possibly open the way for the retest of these swing highs at 103. So 103 here. Breakouts above that level, possibly a retest from above, so something like this, and then another leg higher. So that will be kind of a bullish scenario. Breakout, retest. So I would say major resistance currently at 103. Very, very decent support at 101.90. Breakout above 103 could potentially open the way for the extension towards 104.50 on the upside. But it does look bullish. It does look bullish. So I'll just post it for you.
So we're 10 minutes away now to the final May reads for US S&P Global Manufacturing PMI. Reading of 57.5 expected to remain unchanged. So comments here from the Russian foreign minister noting cooperation at OPEC Plus is still relevant.
Yep, sorry, ooh. Sorry, I was just typing. I probably typed in too much. Keep forgetting. So, there we go. Could Bank of Canada hawkish statement affect CAD Japanese yen bullish momentum? Yes. Yes, of course. Canada manufacturing PMI as well. This came out. The statement is in about 20 minutes from now. Yes.
Looking here to US futures at the US cash equity open as Nasdaq 100 quickly climbs up 1.3%.
Clearly defined trend here. So either something like this, for another leg higher, or a breakout above here and even the shorter term trend is supported by that. So really that 103, that swing high is quite important, and then support to the downside at 101.90. Pullbacks to 101.90 would likely be seen as a buying opportunity. And that's it. So I'm going to leave this CAD Japanese yen. Oh, nice little reversal here. Gold is also doing the same thing. About 20 minutes of this. So what I'm going to do is I'm going to try a little scalp in gold. Very tight. Very tight now. So I'll tell you what I've done now. If I'm wrong, I'll be stopped out very quickly out of this trade. Okay, that's where I am. I could be completely wrong with this. Absolutely completely wrong. This is quite speculative, but let's see. So what I've done is I have a little short on gold. So this is going to be a fairly quick trade. So if I'm wrong, I'll be proven wrong very quickly. So I was just looking at this as a nice breakout. Quite often you see breakouts and then retracements. So to confirm that previous resistance, I newly found support. This 15-minute candle is not completed yet. We still have about 3 minutes, so that's why I'm saying it's highly speculative. But I'm seeing this candle here, which is indicating a little bit of a selling pressure. If this one completes in the same way or a similar
Just
way.
under 3 minutes now to release of the US S&P manufacturing PMI for May, and the final read expected 57.5.
That could indicate a little bit of a selling pressure. So it might not be fresh sellers coming in, short sellers like what I'm doing here. It could be people who were fortunate enough to go long are looking to take profit, and by doing so they need to close their longs. So that's one of the things. My stop is very tight. It's up here about 10 points. 10 points stop. Where would I like to take profit? I would be happy with 1835, 1830, but just in a case if something happens and we see a big flush lower, I have my limit order down here at 1800. So that gives me almost 4.5 to 1 risk to reward ratio. But as I said, I would be happy to take partial profits or profits down here at 1830. Move the stop at entry very quickly. But that's where I am. That's the only trade that I have at the moment. So short gold at what did I do?
1 minute to go now.
$18.45.70. So that's where my entry is. Let's see how this plays out. I could be completely wrong. Here, especially when you see equity indices pulling back. Gold could rally. But let's see.
10 seconds.
10 seconds. Let's see.
57.0 for the manufacturing PMI final May read from the US, as dropping below the prelim reading of 57.5. So looking to the report here, they note that manufacturing upturn slows amid cooling demand, surging costs and materials shortages. Cost inflation fastest since November 2021 series peak, they note, with business confidence well dropping to lowest since October 2020.
Are you guys looking at anything?
Conclusion of the report as well note that the results was the steepest rise in costs since November, feeding through to yet another near record factory gate price increase, and serving as a reminder that inflationary pressures remain worryingly elevated.
Is anybody else looking at anything, guys? Small group of people watching, either in the community and also outside. I know I was away for about 7 days again, so the continuation of my daily broadcasts stopped for a week, but I'm back now. For a few weeks, 2 or 3 weeks perhaps. And then I go to a happy place again. This gold trade is not doing that well for me at the moment. It's currently a losing trade. It's currently a losing trade. Although my stop is up here, I would likely react to a breakout higher and probably close this position manually before my stop is hit, and then reassess everything. Hey Hamid, so good to see you. Welcome back, Hamid. Cable is really selling off, and then look, euro sterling is grinding higher. Euro sterling is pushing higher.
Just over 10 minutes away now to the top of the hour, so we had the Bank of Canada rate decision as well as a few data releases from the US. So looking to the Bank of Canada first, and consensus sees a hike of 50 base points today, pushing the rate to 1.5%. Reminder, we do have our livestock preview for the Bank of Canada rate decision onto our special reports page as well on the board. Knowing the policymakers unlikely to spring any surprises at the rate announcement, at least not in a tight labour market, and with consumer prices on an upward trajectory and even higher inflation expected. So as well from the US at the top of the hour, we do have the ISM manufacturing PMI for May, a reading of 54.5 expected versus prior 55.4, a range 50.8 to 56.2 according to Reuters seen. On the breakdown, the prices paid 83.0 expected, while employment index 50.9 previously, and new orders a prior 53.5. Additionally, we do have the construction spending out of the US for April, 0.5% expected versus prior 0.1, with a range of minus 0.4 to 1.1% seen. And finally, from the US, the JOLTS jobs opening due up with 11.4 million expected for April versus a par of 11.549 million, a range of 11 million to 11.5 million seen. So into a note here from TDS, expecting the Bank of Canada to deliver another 50 base point hike at its June 1st policy meeting to lift the overnight rate to 1.5%. So you see less uncertainty around the decision itself after Macklin pushed against the notion of a 75 base point move in his parliamentary testimony, which should leave the focus on the tone of the policy statement, as they will not be receiving updated forecasts until the July MPR. However, with inflation running near 7% year on year, well above the bank's projections from April, difficult to envision anything but a broadly hawkish tone from the communique.
So dollar CAD is coming to that 126 level. It's currently 126.25. I was just showing you that chart while they were talking, and that 126 is actually a good area. It's a decent support, and it could bounce off there if there is any disappointment. So basically, if the expectations were not met, if the Bank of Canada is less hawkish than what market is anticipating, then we could see Canadian dollar weakness against the US dollar. So that 126 area is actually quite a good area, but I'm not front running the news in news in 9 minutes. I'm not front running that. This is CAD Japanese yen as requested by Patrick, I believe. From the intraday point of view, yet again another trend line, quite a significant trend line. Here we go here. So there's a trend line here, there's another one there, there's another one further. Something like this maybe. Dip lower. Breakouts above this high, so let's say they do hike by 50 basis points and they appear to be hawkish in the statement, or this could break out to the upside very, very quickly towards 103. But I have nothing open in this position, in this currency pair. I hardly ever traded CAD Japanese yen, to be honest with you. Gold is looking little bit better for me. Little bit better. Nothing to get excited about just yet, but little bit better. At least it's showing a little bit of a... Oh, it was blue, now it's red again. Still holding this position. Still holding this position. Okay, guys, we are coming fairly close to the end of the broadcast. I've been broadcasting almost 60 minutes. Almost 60 minutes. Not exactly, but... do you want me to cover anything else very quickly before we finish? So just to update this as well a bit. So I am currently, well, this is closed. This position is closed. So I'm short. I'm short. Gold. At where did I get in? 18.45.70. I don't have anything else open at the moment, so I'm gonna leave that running and see how that plays out. 18.30 would be a good area for take profit on gold. 18.30, if I can get it. 5 more minutes to Canadian. 5 more minutes to Canadian numbers. Okay, guys, I gotta go. It's almost 3 o'clock my time here. I gotta go and do something else now. But it was lovely talking to you all. Stay safe. Happy trading for those of you who were looking at sorry, Raj, I've just seen your question. I'm running out of time. If I start looking at it now, I'll be here for another 10 minutes and I really gotta go. So stay safe, happy trading. I'll be back with you tomorrow. We can talk about silver tomorrow if you want, trading Indian. Good luck, and I'll speak to you all soon. Thanks. Bye for now.
Just over 3 minutes now until the Bank of Canada rate decision. Again, consensus seeing a hike of 50 basis points to 1.5%. A final note here from HSBC, again seeing a raise of the policy rate by 50 basis points. This would be the second straight 50 basis point rate hike, as they expect the bank to signal further rate hikes, with the policy rate heading towards the neutral range of 2 to 3%. Also expecting the bank to indicate that inflation could rise above 7% in the near term, and that there remains a risk of inflation expectations drifting upwards. As well as 3 minutes to the release of the US ISM manufacturing PMI for May, 54.5 expected. The construction spending for April out of the US, 0.5% expected. And the US JOLTS job openings, 11.4 million expected.